Good. Yeah. I think, Raoul, that applause was for me, wasn't it, of course? No. Okay, so welcome to today's panel, people. This is on the future of finance. We've got Raoul Pal. I'm Brian McGleenon, host of Yahoo Finance's The Crypto Mile and a markets reporter at The Block. Now, Raoul doesn't need much of an introduction, everyone. He's a globally renowned economist, investment strategist, and publisher. So today we're going to discuss the innovations of Web3, how they're evolving, how society thinks about banking, money, investing, finance in general. And we'll examine the potential of decentralized finance, non-fungible tokens, and Web3 technologies to disrupt those incumbents that are still hanging on to legacy systems in traditional finance. But actually, Raoul, we'll let Raoul introduce himself, and if we can all put our hands together and welcome Raoul again, please. It's actually great to see you, and for me, I'm very grateful to speak to such an inspiring personality. But Raoul, can we begin and reflect on the current macroeconomic environment? You know, I'm actually sort of involved in a documentary at the moment and I'm detecting this common sentiment amongst a lot of the younger generation. They spend almost 50% of their monthly income on rent. In London, that's actually more. And, you know, they have this feeling they can't save money, and that the baby boomer generation have messed it all up for them, both economically and ecologically. Can crypto un-FUCK this situation or not? That is my question.
It's been my long-standing belief that this is an answer. You see, the traditional assets are all very expensive. People don't have enough money to invest. So what we found is people are searching for another way of being able to make money that has a higher upside, higher expected return. It's a logical thing to do when you have not enough income to pile into investments like the baby boomers had. And also the issue is the baby boomers are in the same workforce as their kids. So that puts pressure on wages. It means that it makes it very hard for people to get ahead. And then we've got technology as another kind of super wave that's also deflationary on wages. So people feel the pinch all the time. Meanwhile, the price of real assets like real estate keep going up, and you can afford much less of them every year. And that's driven a lot by the debasement of currency by the central banks. As they print more money, it optically rises the price of assets. And so therefore your earnings buy you less assets over time. And what's great about crypto is it's available to everybody. It's fractionalized, so anybody of whatever wealth can put in 10% of their paycheck. And over time, because it's basically a technological adoption model, if that technology gets adopted, it tends to be exponential in price gains over time. So it gives them an opportunity to take a stake in the future. You can be kind of like a VC and get those VC-style gains, and you can fractionalize it down to smaller amounts that suits you. So it's very egalitarian in allowing people to participate in the future economic system. If you think, for example, right now, there's an AI boom going on. What can the average person do with that? Well, yes, you can retool your job. You can retool your productivity, but you can't invest in it because the VCs get to invest in it. You don't. You only get to invest in it when it becomes a public company and the VCs have made all the money. Crypto is very different. So I think it's great for the participation for younger people to give them an opportunity to get ahead, more like their parents had. Don't forget, the baby boomers, when they were the same age of about 35 years old, the S&P was trading at a PE ratio of 7. Interest rates were at 13% or 15%, and property prices were super cheap versus wages. But these kids don't have that. They have the complete opposite. So this isn't a chance. I call it the Bitcoin life raft or the crypto life raft.
But do you think a lot of them are becoming a little bit jaded after when they see the likes of SBF and the likes of the incumbents in the traditional finance, taking the innovations that have happened in the crypto space, making them their own and trying to sort of cut it off? Do you not think the kids these days are sort of saying this could be the end of something that could have been something? Or is it the start?
I think if you were to real-time mark-to-market a VC portfolio, you would see, we're going to be billionaires, we're going to die. We're going to be billionaires, we're going to die on a weekly basis from all of your portfolio companies. That's what crypto is, right? It's early stage. Things don't have full traction yet, not full product market fit. So volatility volatility is both a bug and a feature, but it really is the feature of the space because risk-adjusted returns, higher volatility, where the returns are skewed to the upside, tend to accumulate. So it's very hard for people to deal with the emotional ride of crypto markets. I've been in the market since 2012, 13, and I've ridden the ups and downs, the 85% downs. I've seen the multiple 10x, 20x, 30x's to the upside. It's a matter of time horizon. You have to just step back and say, what we're trying to get to is from here to here over a period of time. And that journey is not going to be a smooth line. It is going to do this. But when you zoom out, you can see if you just do a logarithmic trend of Bitcoin or Ethereum, it's just an upward trend. But these wild swings feel very wild. Now, when you're also building business models, you're learning what works and what doesn't work. So if you step back about the fraud and the CeFi market blowing up, what was that all about? Fraud is fraud, right? Fraud happens in all industries, and that's bad, and those people get weeded out. But also, it's because people were trying to build business models based on leverage in a volatility of an asset with a volatility of 80%. So what happens is it's fine with a house price because your house doesn't move a lot in price. So you can borrow money against it. But when you've got something like this that goes up and down a lot, everybody gets blown up. So it's a lesson that people are learning is, oh, we can't do this anymore. Maybe DeFi with smart contracts is a better way of doing it. So we've got a better understanding of where the risks lie. So it really is a business model thing. I know it's hard for people. I get it. I've been through it myself. But it's a matter of staying alive.
Right. I'm glad you mentioned that about the difference between CeFi and DeFi. Raoul, do you think decentralized finance is the kind of the natural state for Web3 and crypto? It's much more, it relates much more to the philosophy of decentralization and things like that. Do you think that's more the natural state?
What we want and what we will get are two different things. We want a decentralized financial system. What we will get is a hybrid, because we're already seeing the traditional financial companies, as regulation comes in, they're allowed to participate. So they start creating vehicles and ability. Now, it's actually not that bad because they understand how to deal with leverage and they have huge experience in huge systems and risk management. So if we want broad participation, let them play a part. But many of us want to operate outside of that system because banks, even today, you're in the UK, Metro Bank is going tits up as we speak, so it seems. And that system, because of the amount of leverage, it's fragile. And what we know about DeFi is if we get it right, it's less fragile. Now, DeFi still has fragilities too, right? We've had hacks, we've had other issues. So again, early stage, but I think we'll end up with a hybrid system, much like we'll end up with CBDCs and stablecoins, and they will coexist. And we get the choice. That's the most important thing. We're not forced into one system or another. We get the choice of how we want to operate and where we want to operate.
Right, I like that sentiment, like we will get the choice. Now, do you think that DeFi, it's going to be difficult for the regulatory bodies around the world to try and incorporate DeFi into their frameworks? Do you think that's going to be a challenge?
I think it really is. They're trying. I mean, I think the EU, the UK, Singapore, a bunch of people are really trying to get this right. Now, a lot of people can't participate in DeFi because of KYC AML. And we have to accept that. So many people are now working on institutionalized versions to allow institutions to do that, but still can have decentralized pools of capital, but with KYC AML. Now, maybe we use zero knowledge proofs to do that at a broader level. So this is one of the issues that we've got. We've got this very restrictive KYC AML global framework that we have to operate within. DeFi falls outside it. Once we solve those kind of things, I think it becomes much easier for everybody to operate in that world.
Yeah, well, I read recently the Bank for International Settlements, like they're working on their unified ledger system and trying to deploy all sorts of like tokenized deposits, CBDCs, tokenized assets, all on this unified ledger system. Do you think that is one of the avenues that they're progressing? Do you think DeFi will be kind of come under the umbrella of big institutions like that?
I speak to a lot of big institutions. They've all got their eye on it. Now, whether it's by creating DeFi protocols themselves and operating within a broader remit of how they want to do it, or whether they are participants in the lending and liquidity of those DeFi protocols. That's what is in my head, that, you know, a big player like Apollo, somebody with a ton of cash, could they be just a liquidity provider? Because it's basically a lending and borrowing market, which is what they do all day. It's a private sector lending and borrowing market. So I think we'll see multiple different uses of this. And again, it's going to be very interesting. I think this cycle we'll see a lot more of that. And these different buckets of institutional versions, fully decentralized versions, liquidity provision to decentralized versions, and everything in between.
Well, talking about this cycle, what do you think we can expect over the next few years from this intersection between, like, we could say we're in a turbo-capitalistic environment to some extent. Automation, you mentioned AI, crypto and decentralization, and all that means with the incorporation of DLT and blockchain. What can we expect from this in an environment of more and more money printing that's probably going to happen with the effect of the debt ceiling and things like that?
So there's two component parts of what crypto is really about. One is the offset to monetary largesse. So that is the moneyness of the equation, the store of value side. We've also got the broken financial system, the excess leverage. Nobody knows who owns what in this very muddled world of rehypothecation and endless derivatives. Well, crypto solves that too. But it's also the technology of which we can build culture on top of as well, and the internet of value. So there's three component parts here, and they're all going to play out over this next cycle. You know, what's amazing about this space, what really draws me to it, is the amount of incredibly smart people trying to solve very specific things. The previous panel was more on the cultural side. There's a lot of people, the music industry, the sports industry, anybody with large communities and audiences are thinking, how can we use Web3 technology? We're seeing the art community using NFTs. I think we'll see the financial community using NFTs. We're seeing NFTs on ticketing. We're then seeing the financial system being built on these rails. We're seeing bonds being issued, money market funds being issued, real estate being issued. So it's kind of endless. And there's like thousands of teams all working on solving each one of these. I've never seen anything like it. It's a true hive mind of brilliance, because I've been to meetings or gone to dinners where you're sitting around a table, and it would never normally happen, where you've got a music artist, an artist, a technologist, finance people, all sitting down together with a shared vision and mission. It's amazing.
No, that's quite. I went to a hackathon recently in Tokyo, and if you ever have any doubts about where this whole sector is going, if you go to one of these hackathons and you see about 300 young people that haven't slept in about 4 nights, and they're just coming up with all sorts of innovations about how to solve multiple issues across culture, across finance, across supply chain issues, logistics, and things like that. So it's really encouraging, actually, you know, what you said there about this hive mind. Now, considering what you said about we're sort of moving into an internet, not of information sharing, but of value and ownership sharing and things like that. Have you heard much about the UK's? It just got royal assent. The electronic trade documents bill has now become a law, and so I was speaking to one of the architects of that, and they were sort of suggesting that this is kind of groundbreaking in the sense that they had to talk to the people that, you know, policymakers, get the legal framework, update the legal framework within this jurisdiction with and providing the same equivalence legal weight to digital items or digital documents as the old legacy paper-based ones have. Do you think that's the next step, to talk to jurisdictions, to talk to legal bodies, and try to get this sort of things out of the digital bubble into the real world and give them legal weight? Do you see that being effective for like DAOs and things like that?
Yeah, and we're seeing it everywhere. I live in the Cayman Islands. We've got, you know, the VASP laws. We've seen it in Japan. We've seen it in Singapore. We've seen it in the Middle East. Many places are starting to realize that, okay, digital goods have value now. So one of the big solves of blockchain technology is, in a digital world, you can pretty much make endless amounts of anything. And that becomes a problem because everything goes to zero in cost, right? Think of cloud computing or email services or any of these things. So if we are going to go into an increasingly digital world, everything goes to zero in value. It's ridiculously deflationary. So, but we need assets that don't go to zero in value. So blockchain does that because you create digital scarcity. That's a huge breakthrough to all sorts of things. So then now you've got a new asset class, which is this digital asset class that has value over time, or potential value over time. And so, yes, the regulators need to realize that this is a new world. And we can see the US struggling with using 1933 securities laws in a world that's not applicable anymore. And I'm highly encouraged by the UK, Singapore, and many other countries, even the EU as well, who've started developing much better understanding of what this is all about and what this actually means for everything. It's because this is the layer that was missing from the internet. That's why it's Web3. It's the layer that understanding that value is now digital, and we just don't have that in laws yet. So yeah, it's moving along the right path, I think.
So let's just let me rhyme off a few headlines. I'm going to paraphrase these that I saw recently. We have things like, let's see now, we've got world trade stagnant, property bubble in China. We've got the debt ceiling alerts in the US. So these are all bad news, basically. Macro environment is pretty precarious at the moment. In this kind of topography, is this an opportunity for Bitcoin, crypto, DeFi, Web3 tech, or is this an obstacle?
So the obstacle was last year when it all went down 85%. We've done that.
Okay.
So we're in what I call crypto spring. But if you think of what's at a more macro level, well, that is the macro level. It's like this is the time when generally the central banks have to start coming back and lower rates over time or stimulate. We've got banks blowing up. They'll end up having to bail stuff out. So that's actually forward-looking good for crypto because that debasement effect starts kicking in again and liquidity starts coming back into markets, which is needed. But at the top level, it just shows the fragilities of the system and why crypto has answers. I can store my crypto on my ledger device and I don't have to fear a bank run. I mean, I know these are small things, but I was in Spain in 2012 when we almost lost the banking system and Cyprus went under, and I lived that. And I saw people getting entirely wiped out by it. And this system offers us abilities to opt out of that. So all the bad news, I think, is good news for crypto.
That is interesting, actually. Do you see, I was sort of looking recently at a lot of the, speaking to different people about the likes of private blockchains, public blockchains, and things like that. Do you see the likes of Ethereum and things like that? Do you see that growing in importance, or do you see that sort of the incumbents sort of taking those innovations, using them, and the likes of Ethereum and stuff like that sort of receding into the background? Where do you see sort of these private blockchains in 1 or 2 years' time?
There will be some private blockchains because that's the nature of these kind of institutions, but most of them will end up building on the public blockchains. I mean, I know a lot of the big investment banks, asset management firms, everybody, and the people who are running the Web3 initiatives and the DeFi initiatives, they're hardcore crypto people. They get it.
Yeah.
But we might get insurance companies, let's say, building some ability for insurance contracts to be NFTs. Could that be a private blockchain? May well be. Is it built on top of Ethereum or a different ledger? Possibly. I think we'll see people trying different models, but over time, as we've seen with the public internet, people just use the public good in the end because it's more efficient, it's faster, it doesn't have costs associated with building, maintaining, and innovating.
Right. Well, it seems like the talent lies in the public blockchains like Ethereum. If you're going to build like a blockchain for Europe, for instance, which is what the EU are kind of have suggested, if they're going to go to the public sector maybe and build it publicly within EU institutions, it could take 10 years, 20 years. But all that talent really is in where the public blockchains are with Ethereum and the likes of that. So I can see that. Now, just lastly, just before we go to the audience for some questions, I just want to sort of go on a more sort of macro level. I don't know, do you know the economist Richard D. Wolff? He lives in New York. Well, I was speaking to him recently.
No.
And he was sort of suggesting, so he was going about the different phases of economic structures through life. You've got like slavery or feudalism, and then you've got the onset of capitalism with around about the 1700s and stuff like that, and then led into the Industrial Revolution. Do you think, and this is what he actually said to me, which was actually quite, because he's a Marxist, he comes from a Marxist background. He said that the onset of decentralization and the innovations from crypto are giving this generation a chance to create something that is better than capitalism. Do you think that crypto has the ability to take capitalism and create something better, or take capitalism and create something worse?
My view on this for a long time has been this is a combination of pure capitalism, but based around community. So it has a socialism element.
Right.
It's kind of weird.
Yeah.
And I really like that because it's not as polarized. Yes, some elements of the community are hardcore libertarians and they believe in certain things. But generally speaking, we're learning to coalesce capital. You require a social construct of how people get on together. And the ability for anybody to participate is very egalitarian. It's actually much more liberal than the other side, which is capitalism. So I do believe it can form a different type of financial system and societal system. I'm very interested in, what is a digital network state in this world? Where does that lead to? And what do those states look like? And we've seen that with the rise of DAOs. We've seen it with the rise of NFT communities. And we're starting to see that the coalescing of societal ideas help drive the capitalist exploits of the community. So yeah, I think it's very interesting.
Yeah, no, that is, we should sort of hold back and just sort of meditate on the space and then possibly come up with a new description of what this is actually creating. With all, like, if you look at the fervor from even meme coin communities where they're all incentivized behind whatever token that they're rallying behind, and you mentioned NFT communities and just DAOs, decentralization, it's an exciting space for building a new economic system, would you say?
I think it's an exciting space for what this could become and what societal systems we can build upon it. So not just a financial system, but another system of participation, another system. Voting systems could go on blockchain. There's a lot we can do with this technology that we don't yet understand. It's still very early stage. We're 10 years into a technology, and we expect to have all the answers. That's not going to happen. It's going to take time. But the faster these chains become, the more efficient. The ability to have layer 2s and zero knowledge proofs and all these other things allow a big unlock in new business models yet to be defined.
And it's more inclusive as well, and gives a lot more people access to these economic systems. And they bring their ideas and they bring their energy.
That's crucial. That's the whole point of this is anybody can come with 10% of their monthly paycheck and participate, which doesn't happen. If you want to get rich in property, you need to own high-end property. You have to be a multi-gazillionaire to do it. In this, you don't. It's special. But we can also tokenize stuff. So I talk about it here in the Cayman Islands, where the expensive real estate is on the beach. That's owned by wealthy foreigners or wealthy families from here. But the locals don't participate in the property that goes up like this in value because it's scarce.
Yeah.
And all they need to do is allow tokenization of real estate, and the entire pension system here can participate at an individual level.
Yeah, so it lowers that barrier of entry. And you said it was special, but it's also fragile as well. Would you not say it's fragile? It could go either way. It could blossom into something special, but it's also fragile. Could you sort of elaborate on any of the threats?
Because humans are involved, and humans, don't always move towards the right answer because they tend to act in self-interest, and that can come with bad outcomes as well. So, a lot of the space doesn't believe in government, and they're libertarian in core philosophy. We don't know the outcomes that produces versus people who want some guidance and understanding. So, there's risks in how systems go because humans are unpredictable by nature, and they tend to follow perverse incentive systems sometimes.
Okay, so we've got 5 minutes left. We're going to take some questions from the audience. Would anybody like to ask Raoul a question? Just raise your hand. Thanks. Gentleman over there.
Hi there. Previous you mentioned that CBDCs and stable coins can coexist, and actually then people can choose which ones to use. Do you really think there's really that choice? Because the governments are really trying to impose the CBDC, and people that are not into cryptos or don't have even awareness or knowledge about it will be also afraid to try different things. So they're going to be a bit stuck with CBDC, no?
So when you step back and look at the financial system, there is the dollar lending markets done by US banks and the Treasury, and that's absolutely dwarfed by the Eurodollar market that was built out of London, which is the offshore lending and borrowing market. It's actually very common. There's a bond market, a government bond market, and then there is a swaps market, and then there's a futures market and a derivative market, which are all private sector markets. So yes, it's the financial system works this way, that there's a duality in how it operates, the private sector and the state sector. Don't forget why the state sector wants the CBDC versus the stablecoin is because they want to own the on-ramp and off-ramp to their nation state. And so I get that, because they want to make sure they pay taxes and their country still thrives and survives. So they will do that and they will impose that. Doesn't mean we can't use stable coins, much like the US banking system regulates how much the dollar can be lent within their system, but they can't regulate it outside in the Eurodollar market. And all stable coins are fractionalized dollars. It's another Eurodollar market, but on chain. So expect it to be vaster, maybe even larger than the CBDCs over time.
Thank you.
Hi, hello? Is it working? Hi, Raoul. I just wanted to ask you, I believe you recently spoke to Cointelegraph, and you mentioned that you think the next bull run is going to be next year in Q2. I just wanted to hear your thoughts on some of the macro factors that have to fall in place for that to happen.
So I think the macro factors happened last year, which was the markets collapsed and priced in the forward-looking economic indicators. Crypto is actually a macro asset, trades a lot versus the kind of business cycle indicators that I look at. And so I was starting to get very positive at the back end of last year and started adding to my positions based on that. This year, don't forget, if I look at Bitcoin, it's up 60% or so this year. Solana's up 130%. We're already in crypto spring and macro spring. If I look at the Nasdaq, it's up 40%. You know, we're already in that phase. The acceleration phase is when liquidity really comes into the market, and liquidity will come into the market as they start to reverse interest rate trends, or they have to add further stimulus as inflation falls and unemployment rises. So I very strongly believe that the high probability is that we started the bull run already, and it will just accelerate over time. It's very consistent with the 4-year economic and business cycle and the Bitcoin halving cycle, which is all based around the same thing. So yeah, probabilistically speaking, I would expect positive, highly positive returns in 24, 25. But as we all know, it may be a high probability, but there's also that uncertainty, that other chance that something else changes that. But we'll see.
Okay, we've probably got time for another question. Anybody else? Get at the back, yeah.
Hi, Raoul. My name's Alan Jones. I'm from a company called Vestin. Our business is going to be tokenizing and fractionalizing hotel rooms across the globe. Gives them a guaranteed income and also capital growth, very low maintenance. What's your views on tokenizing residential compared to commercial assets?
I don't really know. The hotel room idea is a phenomenally good idea. Something I've spent a long time talking to. I think there was a conversation with myself and Punk 6529 about this. Is the capital inefficiency of hotel rooms right now. If I go to New York and suddenly have to cancel, I lose my hotel booking. The hotel loses me at the bar drinking a glass of wine and eating dinner and ordering some room service. And the ability to tokenize the rooms is a phenomenally good idea. Does that work for an Airbnb style structure for residential stuff? Does it work for real estate overall? We think so, but there's a lot of experimentation to be done. But I think the kind of capital efficiency idea that you're working on is a very strong idea. We're seeing, ticketing starting to go this way as well. And that could apply to all sorts of different use cases to make those allocation resources more efficient. So overall, look, I think it's a mega trend, but we are early. I mean, you will have a struggle to get there, but get there we will over time. But I don't know whether that's a 3-year thing or a 10-year thing.
A great plan is the fact that you've got guaranteed income from blue chip companies, like the likes of Hiltons and Wyndham. They actually manage the property, so you've got guaranteed income over a sustained period of time.
Yeah, makes sense.
Okay, folks, put your hands together for Raoul. That was a great discussion. Thank you very much.